Hello everyone. We have a ton of major updates to dive into today. NIO stock is making waves with a technical breakout, a short squeeze, and some massive internal shifts. There's a lot happening, so let's break it all down step by step. First up, NIO has completely overhauled its sales structure in China. A fresh face has taken the lead in sales, and one of the first things he noticed was that the sales team was drowning in non-sales related tasks. In fact, some employees even complained that their workdays were packed with activities but left them with little time to actually sell cars. That's pretty shocking, right? Previously, the sales force had to meet a series of strict daily key performance indicators (KPIs), including conducting a specific number of test drives and making an overwhelming amount of cold calls, sometimes as many as 80 per day. If they failed to complete these tasks, they weren't allowed to leave work for the day. While these metrics ensured a high level of activity, they often took time away from the primary goal, closing deals. The new sales head wasted no time in eliminating these inefficiencies. Under his leadership, the focus is now squarely on actual sales performance. Instead of being bogged down by arbitrary quotas, sales reps will be judged based on how many cars they sell. That makes sense, right? If a salesperson is great at sealing the deal but doesn't conduct a ton of test drives, it shouldn't matter. Selling cars is the ultimate goal. To ensure smooth communication and efficiency, a new initiative has been introduced. Every Thursday, a direct conference call will be held between the sales reps and upper management. This ensures that any pressing issues, challenges, or suggestions can be relayed straight to decision makers without unnecessary delays. Additionally, sales representatives will be provided with whatever tools and incentives they need to improve their performance. This could mean better customer perks, think free window tints, complimentary car washes, or additional battery swap vouchers to make deals more enticing for buyers. Overall, this revamped structure should significantly enhance sales efficiency and effectiveness, and we'll have to wait and see how this impacts performance in the coming months. The next major update is about NIO's recent layoffs. The company has quietly reduced its workforce by 10%, and the way it was executed took many by surprise. Reports indicate that employees affected by these cuts were notified within a mere 20 minutes, making for a swift and abrupt termination process. Naturally, NIO hasn't made any official announcements about these job cuts, as companies rarely publicize layoffs. However, former employees have spoken out about the sudden workforce reduction. When I tried to confirm this information with top management, they were understandably tight-lipped about it. It appears that the layoffs primarily affected employees involved in after-sales services and NIO House staff. This aligns with NIO's ongoing efforts to improve efficiency. Some of the roles that were eliminated included customer service specialists responsible for periodic follow-ups with car owners. While every job has its own challenges, these roles were considered relatively low intensity compared to other functions within the company. This move is part of NIO's broader strategy to streamline operations and work toward profitability. As the company aims to achieve profitability by the fourth quarter of this year, cutting excess costs and optimizing the workforce were likely unavoidable steps. While job cuts are always unfortunate, they are sometimes necessary for a business to remain competitive and financially stable in the long run. Now, let's talk about a particularly intriguing development. Reports suggest that NIO is shutting down its smartphone division. According to insider sources, the team responsible for the NIO Phone has been merged with the Cockpit User Experience division, which handles software and interface elements within NIO vehicles. But there's also speculation that the phone project might be scrapped entirely. The NIO Phone was never intended to compete directly with major smartphone brands. Instead, it was designed as an integrated key to enhance the driving experience by offering unique features that worked seamlessly with NIO vehicles. In many cases, NIO customers used it as a secondary device rather than their primary smartphone. However, NIO had to resort to bundling the phone with car purchases as a promotional incentive, particularly in 2024. This raises concerns about its profitability. After all, the company is not a phone manufacturer at heart. While developing a smartphone doesn't necessarily require a massive investment of resources, it appears that the project may no longer be financially justifiable. That being said, the CEO has previously mentioned that NIO plans to release 3 generations of its phone. So, while we may still see a third iteration, it could very well be the last one. We'll have to wait and see how this situation unfolds. Finally, let's talk about the explosive movement in NIO's stock. The company is currently experiencing a technical breakout and a short squeeze. Over the past few weeks, NIO's stock has been forming a wedge pattern, consolidating, and then breaking out with significant upward momentum. This is extremely bullish, and it has caught a lot of short sellers off guard. It's worth noting that NIO is one of the most shorted EV stocks on the market, more so than competitors like XPeng and Li Auto. This high short interest has played a major role in suppressing the stock price. However, when a short squeeze occurs, the exact opposite happens. As shorts rush to cover their positions, they are forced to buy back shares, which increases buying pressure and drives the stock price even higher. We've seen this play out before. Back in 2020, NIO's stock skyrocketed from just over $1 to an astonishing $60 per share, largely fueled by a short squeeze. At various price points, short sellers assumed the stock had peaked and increased their bearish bets only to be proven wrong again and again. This cycle of shorts covering and driving up the price led to an extended rally. Could we see something similar happen again? If NIO continues its upward trend and forces shorts to cover their positions, the stock could gain even more momentum. While deliveries haven't been the strongest lately, the company is making strategic changes that could set the stage for long-term success. And with the 2025 version of the car set to be released soon, there's a lot to be optimistic about. All in all, there's a whirlwind of changes happening at NIO right now. From the restructuring of sales operations and job cuts to the uncertain fate of the NIO Phone and the possibility of another massive short squeeze, the company is at a critical turning point. These shifts indicate that NIO is aggressively focusing on efficiency, profitability, and future growth. What do you guys think about all these developments? Will these changes set NIO up for long-term success, or do you have concerns? Drop your thoughts in the comments below, and let's discuss. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the